Well, are investors ready to bet on distressed property?
Well, they could be based on the recent deal billionaire investor Wilbur Ross made to buy a stake in Chorus Bankshares' troubled assets. Wilbur Ross, chairman and CEO of W.L. Ross & Company, joins us now to discuss his foray into toxic assets and whether it's a sign of the times. Mr. Ross, welcome.
Good to be here again.
Is it safe to say that you wouldn't have gotten involved in this deal with the FDIC to buy Chorus if it weren't for the government backstopping?
Oh, absolutely, 100%.
Yeah. So what was it about Chorus in particular that, led you to this interest?
Well, we have been participating in all of the bids that the FDIC has put out. We bid on the Franklin Bank assets. We did not win those. And then we participated with the Starwood Group in the successful bid for Chorus.
So how successful has the PPIP been since it was introduced last summer?
Well, it really got going September 30th. That was the first closing. We and one other manager had raised the $500 million by then. Since then, 3 other managers have also raised capital. But interestingly, 4 of the 9 still haven't raised the minimum capital needed.
Is that because they are having problems raising this money?
I would assume so, but I don't really have a way to know. I'm surprised because I think PPIP is an excellent program, both for the mortgage market and for investors. But it surprises me that some of them seem to be having some trouble.
What's it like to have the government as a 50-50 partner?
Well, it's early days, so we don't know for sure. But I think it'll be fine. It was a very carefully negotiated document over many, many months. Government retained Simpson, Thatcher, and Bartlett, a very experienced deal firm, to give them advice. So unlike TARP, which was kind of done in the heat of night on a more or less blank piece of paper, this is a very carefully negotiated partnership.
Well, you speak of TARP. We just had Elizabeth Warren on just before you arrived here. What's your assessment of how the TARP program has been handled, how it's progressing?
Well, I think it was essential for the government to do something when they did. I think it would have been better to remove the toxic assets even a little bit sooner than they're trying to do now. Remember, TARP originally wasn't so much to invest in the banks as it was to clean out the toxic assets. And I don't think banks are going to make credit, particularly consumer credit, available again until they get rid of those bad assets.
I'd like to get back to specifics with your PPIP fund. You also have an associated fund that seeks to buy whole loans from the FDIC with leverage also provided by the FDIC. So you promised, I believe it was the Connecticut State Pension Board, a 20% annual net return. Are you standing by that figure?
Well, that was a number a Bloomberg reporter came up with after talking to the Connecticut State Pension Fund. So the real question is, does Connecticut stand behind the number?
Okay, so you're not standing by that number. Can you give me an idea, though, of what sort of...
It isn't a question of standing behind. SEC has some tendency to frown on people forecasting results.
Fair enough. All right, so...
We're in the private equity business. We're accustomed to making high rates of return. We believe this will be a very satisfactory product.
Double digits?
Sure, certainly.
Okay, we'll leave it there. We came to an agreement.
And then, Mr. Ross, before we go to break, I want to ask you quickly, Goldman put out a note this week saying that now's an ideal time for takeovers. Do you agree with that assessment? Well,
there are more and more takeovers occurring, and I think as markets get stronger, you tend to have more takeover activity. It may seem counterintuitive, but when markets are weak, you have very little takeover activity. When markets are strong, you have much more takeover activity.